All right, sorry about that. I lost you guys. I got kicked out. And I'm back. Thanks for rejoining. We'll continue right where we left off. Let's go take a look at those messages that you guys sent me. Sorry about the wait, guys. I still have the other window up, so I'm just going to read through the messages that were being left for me. All right, so you guys can hear me okay, see me okay, everything good? I think so, right? We lost a bunch of you. That's too bad. Too bad, so sad. All right, so where were we? About Bitcoin. Bitcoin will be funny this year. Luna also. I totally agree with you. I bought gold as well when the war started. Oh boy. Good boy. Yeah. I hope you got out quickly with that one. Pips have not get this week data, May 10th. Yeah, this week's data that is going to be coming out tomorrow. Okay, tomorrow at 3:30. What indicator would you recommend trader to use for COT report on chart? I don't use an indicator for COT reports on charts. I don't use any indicators. I don't like indicators. I think indicators are just a waste of time. They try to make something that's complex simple, and if you try to make something too simple, you're not going to be getting what you really need to get out of it. That's the problem. Okay. So I just like to manually analyze things and use my brain, and and then once you know what's going on, you don't need anything on your chart to be telling you, oh, this is how long they are, because it's going to give you a false impression of what's going on. If you see that the institutions are so long something, you shouldn't be getting excited thinking, oh, I should get in long too. Don't be thinking like that, right? But there's this tendency to see something really bullish, a signal bullish, and then you want to get in. If something's really bullish, that means it's run its course. You should be getting in long when it's extremely bearish. That's basically the idea. Okay, obviously you have to know within the context and so forth. Invaluable information. Can we get more likes here on the other? Yeah, on the other video, if you can hit the like button, that would be great. This one is just going to be a little one that I'll attach to the comment section of the other video we did. Let's see. Good morning. What about T notes? Don't really look at those. Sometimes I do, but it's not something that is my specialty, so I won't really comment on it. Tesla, hello from Kenya. What's up with Tesla? There was some nice sell-off that was taking place, wasn't there? Didn't Bill Gates apparently cause a sell-off because he was exiting from positions? Sure. Yeah, and then they advertised it to the world, right? Yeah. Yeah, it's holding up pretty well. It's holding up pretty well. Not much to really see here. I wouldn't be shorting it at this point. I don't think it would make a good short. Just my opinion. Too many obstacles to get through before it could, significantly drop. So I wouldn't want to be involved in that unless those obstacles were removed, honestly. Tesla, hello from Kenya. How are you, James? US CAD, please. We looked at it. Bitcoin. And how does hedging apply in the COT? Oh, gosh. That's a long conversation. We've talked about it. We have a lot of video lessons talking about it in the school, so I'm not going to go into it more here. Aussie Japanese yen, I was speaking of the highs on ES. The highs on ES. Billionaire. Let's see. What's your stop loss looking like if you do enter on the close of those highs? Enter on the close of those highs. Well, enter in the long position. I wouldn't be entering long, and I wouldn't be entering short, so I wouldn't have any stop loss at this point. Because if you enter in long now, how do you know it doesn't go lower? What are you going to do? You're going to be like a your average typical retail trader, and you're gonna put your stop loss below the previous lows. I mean, they're gonna hunt you. They're gonna hunt you. That's not the way to trade. You don't do stuff like that. It'll work sometimes, but the vast majority of the times it won't. If you go in long now with a stop loss here, what's to say that they're not going to do that before rallying up? They're going to create the bullish looking candles to sucker you in to make those decisions. I would not be going in long. No, the market is heavy right now. The pressure's to the downside. If I wanted to open up a position and walk away for 3 months and come back, it would be a short position. It would not be a long position. I would not be looking at going long at all. Okay? It's not going to work out. It could work out, but you think this way over a longer period of time, you're going to lose money. So I would not even think about going long. No way. No, these rallies, I know it's tempting, but the odds are against you. And I don't want to put my money in something where the odds are against me. I want to put my money in something where the odds are in my favor, because I'm in this for the long run. So if I'm in something for the long run, I want to be more consistently making money than losing. But if you trade counter trend in a situation like this constantly, you're going to find yourself with more losses. Gold is dropping as we were speaking. Yeah, making a move to the downside. No surprise. So that was the comments up until last session. And then this session we have, how can I trade gold with COT? Sometimes is opposite to the data. Why? Well, exactly what I just told you. Because the data says they're very long, but they're very long because they've accumulated from lower down on the chart. So that's why it's opposite. And, the thing is too, is that, most traders are told to look at commercial data. And the commercial, I don't know why anybody would even fall for that, because it's very specific. When you read who the commercial traders are, they're hedging against real positions. So, they're going to do the opposite of what they think the market will do. They're going to short if they think it's going to rally. They're going to, go long if they think it's going to drop, that because they're hedging against what they really have. So it's like, who the hell would listen to the commercials if they do the opposite? Obviously, you shouldn't do that. You want to do what the speculators are doing, because they're speculating on the direction. So that's how you would use the COT data. You have to see them building up a position. That's what you'd be focusing on, watching them build a position and then going along with that. Show us where the US COT is found. Yeah, it's in a different spot. If you go to the CFTC website and you scroll down to right here, ICE Futures US, short format, scroll down, US index. That's where you find it. Okay. People got addicted on buying the dip in the last year's rally. Yeah. People got addicted to buying the dip. And now they're going to pay for it because they've accumulated such a large position. You get cocky, right? The first few times it starts to work, you're like, you weren't betting hard. But, when the prices are really high, you start getting a little bit overly confident and you start going in with heavier positions, and that's when they reverse the markets. All right, ladies and gents, so that's good. Thanks for coming back. If you were able to make it back, I will post a link to this video to the original one. And that's it. Enjoy the rest of your day, and we will see you around. Take care, everybody.